Welcome to Trading Nation. I'm Eric Chemi. Today we're joined on the phone by Helima Croft. She's Global Head of Commodity Strategy at RBC. Helima, we got the big OPEC meeting coming up here. A lot of stuff in play from a policy, geopolitics, markets point of view. Can you give us a little bit of a preview of what we might expect to see?
Well, I mean, the expectation right now is that OPEC and their non-OPEC co-pilots are going to roll over the 1.8 million barrel a day production cut for all of 2018. And so that is something that market participants have sort of baked into the price. And so I think now there's been a new jitteriness coming into the market because the Russians don't look quite as solid as they did a few weeks ago. And a number of the major Russian corporates have been very public about their displeasure about extending the agreement beyond Q1 of 2018. So now people are concerned that when Russia shows up, they may relinquish their co-pilot role. And if Russia's not willing to sign up again to extend the cut, people fear that we're going to get something shorter than anticipated. So I actually think from a price perspective, some of the risks are really to the downside, because if we don't get a full extension for all of 2018, I think this market could sell off very similar to what happened in May when the statement out of OPEC did not reach market consensus and expectations. So I'd be watching very closely to see what does the rollover look like.
Obviously, the U.S. not a member of OPEC, but there's got to be, my imagination here, some sort of soft influence, some backdoor conversations. What is the U.S.'s role in trying to shape OPEC's strategy and policy going forward, as it might help just its geopolitical situation in the Middle East?
I mean, I think the U.S. actually played a bigger role in trying to influence OPEC and Saudi Arabia in the period of higher oil prices. I think we put more pressure on Saudis to essentially put supply onto the market to try to essentially moderate the price environment. Right now you have a situation where you have OPEC leaders really reaching out to U.S. producers, trying to sort of incentivize them to curb production. I mean, Barkindo, the OPEC Secretary General, has sat down with a number of shale producers and basically laid out a case that maybe they should sort of coordinate policy unofficially. There are no signs that any U.S. producers have taken that offer. That said, we have reports that OPEC officials are meeting with a number of traders to try to understand what U.S. production will look like next year. They don't want to get this wrong. They felt they were blindsided by the growth of U.S. shale production. They want to make sure that they have their policy calibrated correctly, and they understand what the U.S. could be doing at various price points.
Don't you imagine if there was ever a news story that came out that said, oh, this big U.S. oil firm is coordinating production with members of OPEC? I assume that would be bad PR, right? Especially in the light of this current administration.
I don't know if it would be bad PR, but I think what's really different when we think about OPEC versus U.S. producers is, I mean, the decisions about production for Saudi Arabia, for Iraq, for Russia, often are made by the heads of state. They're not made by technocratic oil ministers, or even in the case of Russia, the corporates may say they don't want to extend the production cut, but if Vladimir Putin says, you're going to sit down your barrels, they have to sit down their barrels. Rick Perry cannot tell U.S. E&P firms what to do. So it's an entirely different landscape for the companies that operate in the U.S. versus the Middle East versus Russia. So there can't even be coordination, I think, because, again, it's just how the energy systems are set up in those countries.
So how much of your job as global head of commodity strategy, I mean, how much of this is really about commodity trading versus just policy and geopolitics and what's happening in the Middle East and all the politics that goes on there in sometimes very volatile countries? It feels like this kind of strategy in the financial markets, it's very different than if you were an equity strategist or a bond strategist, right?
Absolutely. And I mean, the OPEC Secretary General Barkindo has actually said you can't be a good OPEC analyst or a good oil analyst if you're also not a geopolitical analyst. Because when you look at these sovereign producer states, the decisions about production policy are often made by the prime minister, by the kings, by the princes, with the input of the oil ministers. And the oil ministers look at it very much in terms of supply and demand. Technical factors are technocrats. But the head of state is thinking, I need a certain oil price to balance my budget. I need a certain oil price to pursue my strategic objectives. I need a certain oil price to keep people out of the streets and not protesting. So it is very political when you think about OPEC, when you think about Russia. The decisions around production are very much political with an eye to the domestic situation. Of course, the oil ministers, again, they're looking at supply and demand, they're looking at inventory levels, but the person who stands above those ministers, they very much take domestic political, security, and strategic factors into consideration when they think about what the production level should look like.
So obviously we've seen this move in the last few weeks from 50-ish to about 60. Where do you think we end the year at and head into the first quarter in crude oil?
I mean, part of the story has been the improving supply and demand picture. Inventories are coming down. Demand has shown to be robust this year, but arguably another big factor in this move up has been the renewed instability, the geopolitical risk premium coming back to play in the market. The dramatic political shakeup in Saudi Arabia that we've seen the last couple of weeks, unprecedented number of arrests, that has caused some concern about what is the outlook for Saudi Arabia, what is the outlook for Middle East oil supplies going forward. And then we have another major producer, Venezuela, which is facing a potential default by its national oil company, that we could see more barrels coming off the market in terms of that. So if we get an OPEC meeting where they roll over the 1.8 million barrel production cut for all of 2018, I think prices will move, a couple dollars higher. So essentially locking in levels that we see now. But the big wild card for Q1, I think, is going to be what happens to a country like Venezuela. Do we really start to see those barrels roll off the market in a lot faster fashion? And that could be one of our big upside stories that you really need to pay attention to.
Helima, this is really good stuff. I appreciate you coming on here and chatting with us about it.
Thank you for having me.
All right, so that was Helima Croft, Global Head of Commodity Strategy at RBC. I'm Eric Chemi. Thanks for watching Trading Nation. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.